Always a pleasure to speak to you, Trinh. Thanks so much for taking the time out. And what do you gauge could be the economic impact of this, I mean, the tariff deals that Donald Trump is signing with various countries? I mean, the last I heard, Vietnam was still calculating what the impact of this will be, even as Donald Trump went ahead and announced it, right? So the details are not known, but you would have some hypothesis, I presume.
Right. So I think for Vietnam, the tariff levels are higher, but they're much significantly less than what they got on reciprocal tariffs, which was 46, and now they got 20%. And I think this is very important for Vietnam because the U.S. is a big market. It's not just about the exports to the U.S., but its entire growth model, which is essentially attracting FDI. And through FDI, that fuels investment, that fuels consumption, the rise in GDP per capita, and also that fuels public investment in infrastructure. So all these things have driven Vietnam to be the first in Asia to get a deal. Obviously, we got the China pause, but really, other than the UK, Vietnam is the first. The question is it a good deal for Vietnam? And that remains to be seen. It remains to be seen for two reasons. On what the others will get, right?
Trinh, can I come in? I mean, I was using Vietnam more as an example, but Vietnam has it. There is a mini trade deal in the offing or something like that for India. He's talked about some others. What is your hypothesis of what it could mean for Asia at large and India in particular? Sorry, I would want to know that.
So for India, I think India will be next for the deal. It's already announced by both governments. It's not very clear how that will come out, particularly on the agriculture front, because as you know, the U.S. for the Vietnam one is very important because it says that Vietnam opened itself wide for the U.S., while for India, it's going to be very difficult to open itself wide for the U.S., given the fact that agriculture is an important vote bank and employment. But I do think that for India, it will come and the tariff rates will be higher than what it had, but at the same time, it will allow for India to still be very competitive vis-a-vis China. But it's not going to be a free lunch in terms of being able to export to the U.S. It means that it's going to rely on India to actively make sure that there's no transshipment with China. And I think India is going to be a much easier position to do that than other countries because it is also in its interest to make sure that it moves up the value chain. It is interest that there's no low value add goods transmitting through for the country. And getting these deals through will be important for India because India is one of the winners in this second round. Having some certainty would mean that continued foreign direct investment inflows into manufacturing, but not only because manufacturing is supported by other sectors like industrial policies, electricity, infrastructure, and so on and so forth. So I think it will be a big boon for India when it does get it. In detail, so we need to be ironed out. And I think the keys for a lot of the countries is to run really fast, to focus on key sticking points. For Vietnam, it's just on aggregate level. For countries like Japan and so on and so forth, it will be sectoral, right? The EU in particular, auto is a big sticking point. But for India and Vietnam, it's less so. Particularly Vietnam, it's more on an aggregate front because it's not really impacted on a sectoral level. So the lesson here is it's very unlikely that countries will get tariffs down to zero. The best is 10%, which is what the UK began, and Vietnam getting 20% is optimistic for India because it was one of the worst recipients of these tariffs.
So, Trinh, hi, Tamanna here. Just to press down on that point where you say that India is best placed or will be in a stronger position. Can you elaborate on that and why vis-a-vis, we talked about Vietnam, but also China, because the trade deal with China is now in place. And they put out a statement saying that let's, roll out the London Agreement.
Well, there isn't a trade deal with China. There's a trade truce, right? China got 25% in Trump 1.0 into Biden. After that, it got fentanyl, which is 20%. On top of that, it has a 10% pause of reciprocal, which obviously is better than 145%. But overall, we still have 55% tariffs on China, and that's under the best case scenario. I think it's probably going to be somewhere around there, but which means it's going to be very high. So India will still be able to benefit from having a lower tariff level. It depends on what it negotiates with the US. And obviously for India, sectoral tariff will be very key for sectors like pharma. But why I think a deal will come with the US is that there is synergy. The Vietnam deal shows that the U.S. does need trade partners, and Vietnam is an important trade partner. The U.S. will need India if it wants to go very hard on China in terms of tariff rates, because these are countries with low labor costs. And the U.S. is a very expensive country, right? So as a result, it needs trade partners, and saying likewise, India does need the U.S. as well as a trade partner, as an export market, and this is an opportunity for India to really cement that made in India thesis that wasn't very salient in Trump 1.0, and therefore I do think that there is synergy between India and the U.S. and for Trump to get a quick win, as well as the Modi government.
Trinh, in terms of where the negotiation is stuck, and this is something that we've been reporting, so just want to get your perspective on this. What seems to be a red line for India is access to agri and dairy segments. And that is something that the US negotiators are, of course, keen on. Do you think it's a deal breaker on the American side?
Absolutely no. I don't think it's a deal breaker. I do think that there are ways in which to maneuver this for Agri. Obviously, the habits of the Indians in terms of diet are totally different than U.S. And some things you cannot, it has to be onshore. So I do think that this is a sticking point. But like I said, I do think that the key here is to get big wins and iron out the details later to avoid the crosshairs of reciprocal tariffs. And I think that's the key message from what happened with China, where going tit for tat only escalated the situation further. And in reality, this truce actually doesn't really establish a lot. It just de-escalated the situation. And I do think at the moment, given the fact that negotiations are very difficult with Japan and difficult with Korea and other countries, all allied countries, a country that's much more politically stable in terms of politics, can gain in negotiations. And India, of course, the agriculture sector is very different than Vietnam. And in that it has much more to lose from a political point of view, and it has to be treaded carefully. So that red line can be maintained. And I think other areas India can give to Trump for big wins.
Got it. Trinh, one final question, and which is when you think of growth economies, right, and versus the valuations in India may be trading at, and I know I'm asking a lot on India today, but you have this very wide view on India, right, and hence it becomes important. Would you reckon that if growth in India continues to be is this between 6 and 8%, then flows into markets like India would continue? Because thus far, in the last 12 to 18 months, it's literally been patchy. Up one day, down the next, if you will.
Well, I think there's a theme that's being played, which is too much concentration in China supply chain, too much concentration in U.S. financial markets. So where do we go from here? So of course, investors have been buying EGBs, euro, very safe. But I think India, EM, is going to be very big. Why? Because if you look at India, it has low leverage from the corporate sector. The Indian government itself is actually very, very open to go outward, to grow. And this is very different than before. The mentality is that it's lost in Trump 1.0 and 2.0, it's going to really industrialize. So I do think that India is going to grab this opportunity much harder than last time. And as a result, it's going to be very pro-growth. So if you look at from the central bank, where rate cuts have been very salient and very quick, to policies to really push for the deal, and also trade negotiations ongoing with not just the US, but other countries as well. I do think the investment thesis for India continue to be very strong. And one thing to be said, and this is something I said in financial television a lot, is that high valuations do not necessarily mean that it's going to go lower. It just means that low valuations also does not mean that it's going to go to higher, right? China is an example where industrial profits continue to plummet. The price war there continues to be very intense. And so therefore, return on capital in India continues very high. Earnings, after being disappointing last year, are being revised higher again. So the earnings differentials between China and India continue to be pretty strong. And therefore, there's different valuations difference. The second thing is, of course, there's sectoral differences in these different indices, right? So I do think that that's something investor has to be mindful. And India, in my opinion, as an investment thesis, continues to be there. And perhaps instead of portfolio flows, we might get more FDI this time around. And I think that should be much more welcome, right? Because portfolio flows are buying into Indian companies, but FDI are foreign companies going into India directly, and they themselves will invest and spend, and most importantly, employ more Indians. And I think that is what India needs in the next stage of growth, which is growing the middle class via employment.
Okay, thank you so much, Trinh Nguyen there this morning talking about the big trade deal. Should we start calling it the big, beautiful trade deal? It's not quite the, well, we'll hope it's beautiful and big, but thank you so much for that.